Let's get to Lyft, though. They are higher here in the after hours. We're up about 3% right now. It's after the rideshare company reported its first quarter results. Here to discuss further is Tom White, D.A. Davidson Senior Research Analyst. So, Tom, it's good to see you. Lyft reports the stock is higher here initially. At least investors seem to like what they see, Tom. But let's get your reaction. What's your response to what you're seeing?
Yeah, first off, thanks for having me. Look, we're not surprised to see the stock up a bit on the print, particularly given the fact that Lyft shares were down about 5% today. We think maybe that had a little bit to do with the Uber Instacart kind of partnership news that hit earlier this morning. But look, the Lyft quarter was strong, particularly on the top line. The gross bookings came in above the high end of the range. And all the way kind of down the P&L, you saw some upside to what people were expecting. Second quarter guide was also a bit better too. They largely affirmed the outlook for the full year, so they haven't really kind of taken up their expectations for the full year on kind of revenue and EBITDA. A little bit better free cash flow conversion. They kind of upgraded the outlook a little bit on that. But yeah, generally a strong quarter shows that this company continues to make solid kind of executional and operational improvements under their relatively new-ish CEO. I guess he's not that new at this point. It's been at least a year or so, but yeah.
Hey, Tom, anything in this report to get you excited about the stock, maybe take a bullish view of it? Could it be maybe next quarter expanding that full year view, getting a little bit more aggressive there in terms of setting up expectations?
Yeah, look, I think the main thing that we're interested in tracking is just their market share, their category share here in the domestic rideshare space. This is a company that at the time of their IPO, kind of pre-pandemic, had significantly higher category share and market share than it does now. It was gaining share also, and then the pandemic really kind of negatively impacted that trajectory. And so we're seeing Lyft kind of recapture some share. Part of that is due to some lower pricing that David Risher, the CEO, kind of implemented when he assumed the reins. But we're just trying to get a sense of whether or not these share gains are really sustainable, or is this just kind of an inevitable kind of bit of recovery from a relatively depressed level of category share, and it's going to be hard for them to kind of meaningfully get to where they were maybe pre-pandemic.
I'm interested, Tom, because you mentioned CEO David Risher, and he has been at the helm for about a year now. And I'm just interested, as a financial analyst, Tom, you know the company backwards and forwards. What do you make of the job he's done, Tom? What grade would you give him?
Yeah, look, it's hard not to give him a good grade. B plus or above. The numbers pretty much speak for themselves. You've had here, I think 4 straight quarters of kind of accelerating growth on the rides front. Very prudent and disciplined around operating expenses. We had our first quarter of free cash flow positivity in some time last quarter. And so, he's doing a good job. Again, the business, I think, had some pretty glaring issues that it had to address when he got on board. So I don't want to say that it was sort of low-hanging fruit, some of the stuff that he's tackled. But he's got to keep it up here, I think, for the stock to probably get a meaningful leg up from where it is now.
And Tom, let's push ahead because Uber, of course, reporting results tomorrow, Tom. It's another company in your coverage universe. What are you looking for there?
Yeah, look, we expect a strong quarter from Uber. We think the core ride-sharing business, continues to grow at a healthy clip, and we're really starting to see the kind of the EBITDA flow through and the free cash flow generation potential of that large and dominant kind of rideshare platform in the vast majorities of the countries they're in. Delivery, that's all about kind of TAM expansion and entering new categories. Getting bigger in some of the categories that they've kind of been in for a little bit longer. And then you've got kind of like new growth unlocks here that have emerged over the last quarter or two. Things like advertising, things like Uber Reserve, some of the new mobility products, which we think all kind of create a bunch of interesting tailwinds here for that stock over the next 12 to 18 months.
Yeah, and I want to get you on that question, Tom, because I know you're a believer in Uber, you're a buy. What do you see as the catalysts ahead?
Yeah, I think Delivery, making more concrete progress and sharing results of some of the momentum they have in delivery outside of the core restaurant vertical. I think that's something that investors are excited about. Again, the total addressable market for rideshare, I don't want to say it looks kind of capped here, but I think investors have a general idea of maybe how big that market can be over time. With delivery, it feels a lot more wide open, right? There are a lot more new categories, verticals that can be entered. You've got kind of sweeteners to growth on that business also in areas like advertising. So, I think progress on the new delivery verticals is probably the top one, and then momentum on some of these newer mobility formats, things like Uber Reserve, things like hailables, are the main catalysts I'd point to.